We ready to get rolling? Norris, do you have, or does anybody have, I think it was handed out, emailed to everybody at the beginning. It's a breakdown of different types of sweeps and stuff. Anybody have that handy? Yeah, if you can, when you find it, just post it in the room, and I'll go off. I'll go off that. Let me see. This should be it. Whoop. Yep, this is it. No. Is it? This is not it. Norris, this is not it. There was, oh, wait. Maybe it's us. My bad. There it is. Okay. There it is. Yep. Perfect. Okay. Let me minimize this. All right. Let's get rolling. Today, we're going to talk, and what I'm going to do is, especially with some of the other stuff, because I want to use current days that we're holding these webinars on, courses, lessons, whatever we're calling them. It'd be nice if we could use some examples from that actual day to go over. Today and this week is a tough week. With the Fed and being a monthly expiration, a lot of mess. But going forward, I may flip around from an outline you may have and stuff like that, just to get better examples, real-time examples for you guys to look at. All right, but what today we're gonna focus on is the order flow itself. Okay, and again, this stuff may get repetitive for those of you who already may know some of this stuff, all right? But the likelihood is maybe you discover something new that you didn't know of, okay? If you're familiar with the majority of this stuff. But not only are we gonna take a peek at the different type of orders, what the makeup of these orders are, what they actually mean, right? And I think that's a big problem amongst a lot of people who follow flow. They think they know what the order flow is telling them, right? Or they're making the order flow into something they want to hear, and it becomes a problem, okay? And a lot of times, this too, I think, is overlooked. Many times, there is flow out there that doesn't make any sense, or you can't get a read on. You're confused. You thought you were seeing one thing, and now you have some doubts. That's all good, and that tells you that whatever you're doing is working. You're on the right path, okay? Because once you understand exactly what we're looking at on a day-to-day basis, it's going to make sense to you that not every day is going to be some crystal clear storyline that's just going to jump out at you, right? And that's what makes those crystal clear storylines so appealing and such a great setup and something to get excited over when they do come around, okay? But let's start off very simple, right? What is the actual options order flow we're looking at, okay? It's like we were talking about yesterday, okay? We have a pretty good idea because of what we're screening for and what we're focusing on. We're looking at basically professional positioning in the options market, okay? Whether it be via hedging, protecting equity positions, adjusting existing positions, flat out wagering, right? Rolling the dice, hoping or betting on news or an upgrade, whatever it may be, Okay, but on a day-to-day basis, we're seeing in real time actual positioning amongst professionals in options. All right. And what I just mentioned very quickly in that statement, in real time. And that's the beauty of all this, right? I think I mentioned to you guys in the past, like insider trading, right? Seeing what insiders are doing. That's something I was like really into when I first got into the business. It was a big thing, right? You look to see if insiders are buying a stock. When it's weak, dead, buried, it was usually a pretty decent signal. Okay. That was delayed information. It was delayed. Somebody already had an edge over whatever edge I thought I had at the time. Right. And another thing is like those, what do they call it? They 13F with 13F, I think they are filings, right? When you see Tepper and Ackman and all these guys announce what positions they've taken and liquidated, etc. That's like reading last month's newspaper. That's how delayed that information is. And you see, on social media, stock twits, I mean, even us, because we're interested to see what kind of moves they made, right? You see how people get excited about, what names Tepper got in and out of, and what new name Elliott or Ackman has been building a position in. And it's severely delayed. I mean, delayed enough to the point where they could be out, they could be selling that very same thing they were buying when you're seeing it. That's how delayed it is. All right, so what we're looking at in the options market is real-time info right in front of our eyeballs and face. Okay, the only difference is we got to do the legwork, or somebody's got to do the legwork to actually, put some pieces of the puzzle together and cut out all the fat. All right, but that work is worth the time to get access to that in real time, because nobody but the players or hedge funds, institutions themselves who are placing these orders, nobody has an edge over you, especially as far as timing is concerned in regards to options order flow. And I think that was, that right there was the drawer, like really, that reeled me in. All right, that was the bait on the rod that really reeled me into flow. All right, if I could figure out a way to focus and zone in on certain things and cut out, like I said, a lot of the fat and the noise out there, it could become a real edge. It could become a real edge. All right, but understanding that we're just watching, the professionals do everything I mentioned as far as positioning, hedging, protecting, and wagering all at the same time. We got to understand that the orders that come in on a day-to-day basis, okay, don't always mean something, right? Especially to us. Definitely aren't all actionable, right? And, to give you an example, this is a point I'll hit on later on when we talk about, the type of flow we're looking for and when we're looking for it. You guys know I preach about earnings season, where, you have to take all the flow with a grain of salt, right? Or even a quad witch week like this week, because of all the rolling and hedging going on into the Fed. Okay, why do we need to do that? Because that cuts out the fat. That gets rid of the noise, right? If we know during earnings season there's a high elevated probability of hedging and protection and less clean wagering going on, it's a lot easier to just push it all aside than to try to pinpoint, the isolated situations where they're not hedging and protecting, right? Not hoping we get lucky and find a bet that's actually directional and not hedging and protecting during earnings season. So that's why we do those things. Because if we're picking from a smaller pile, right? Because again, going back to yesterday, we don't know what the true intent of these orders are. We really don't. We don't know these players personally that are placing, these sweeps, right? So there's no way for us to 100% guarantee know what these orders mean. Okay, so we have to do a lot of the stuff like cutting the fat and focusing on a smaller pile to pick from, because our hit ratio, in other words, choosing from that pile what may be an aggressive directional bet, the odds of it will be higher if we're choosing from that smaller pile. Hence, will likely lead to more success, right? So that's why we do those things. So especially if you're new to this stuff, understand and don't get overwhelmed by the flow when you can't make sense out of it, or you're not realizing what's actionable, you're not sure what's actionable and what's not, because that's what you should be doing. That's what you should be doing. The opposite would be assuming everything is actionable and playing it based on just hunches. All right? So that's what we're gonna talk about today, and hopefully I can fit the majority of it into this webinar, right? So let's start with basically plain and simple, right? The sweep, okay, and then we'll go through some of the other orders we see, right? So you guys know I have a sweeper fetish, as I like to call it. That's all I like to look at. I don't play anything that doesn't catch a sweep. I mean, pretty much to that point. And the reason being, all right, a sweep is as aggressive of an order as you can place in the option market. Okay, doesn't mean it's always going to be an aggressive directional bet. Okay, but the behavior behind the order and who is behind the order, it tells you two things. It's coming from professionals, okay, and that player is stressing urgency, wants to get filled, doesn't really care about the price they're getting filled at, right? And what we're looking for in a sweep, and to put it into simple English and not to use the technical definitions, right? You all know how you place individually an order in the options market when you buy something, right? So a sweep, what it does is it sweeps multiple exchanges, okay? So many different exchanges out there. It will sweep multiple exchanges to take out any offer they want on those calls and puts in the name. Okay, so they basically want everything that's being offered out, let's say their calls, everything that's being offered out across all the exchanges, that player wants to sweep the book. All right, so obviously an aggressive order. And, a lot of times, to me, it's noteworthy, and we want to be aware of any sweep, even if it's not a directional bet, even if it's protection or a hedge. We want to be aware of it because of how aggressive the order is, right? Because think of it logically. If somebody's even short and they want to protect their short, okay, and they're that concerned, right, that they're sweeping offers to put on protection, right? It's showing us the concern there, the urgency. Maybe they sense a squeeze coming on. Maybe they're afraid of some news on the horizon, right? So they're going out and aggressively buying protection. So it's got the same behavior behind it. It's got the same behavior behind it. So we want to at least be aware, right? We want to know about that type of order flow, all right? As opposed to some of the other order flow out there, okay? Which, again, there are different types of them, but let's talk about blocks that, many people follow, right? I mean, as common as even, pundits on CNBC will talk about and label them aggressive bets, right? They'll call a block an aggressive bet. But in reality, and I know from experience of, looking at the order flow on a day-to-day basis for years, a lot of these blocks are negotiated, a negotiated price. Right? So if you put yourself, and this is, what I like to do with everyone to understand the difference. If you put yourself in the player's shoes, right? If you really have that conviction that XYZ is ready to move, or the fundamentals are about to turn, or there's going to be an upgrade from JP Morgan coming, or there's going to be chatter of possibly Elliott taking a position, are you going to go out there and negotiate a price on a block? Or are you just going to go and try to get filled on as much as you can possibly or want to get your hands on? And what I realized was early on that a lot of these blocks, when I dug deeper into the flow, there was always something attached to it. What I mean by that, there was always a block of equity that went off with it at the same time. Okay. A lot of times, thanks to software like Trade Alert, we can see which blocks are tied. Okay. A lot of the other software out there, like people use Fidelity and Thinkorswim, you're not seeing that. You know what I mean? You're not seeing that. So, as just looking deeper into the order flow, every time these blocks would come around, there was always an excuse behind it. They were tied to stock replacement, rolling, right? When players roll positions, okay, and what I mean by that is they're adjusting positions, as many as you guys know. So I'm selling my calls in Microsoft June, and I'm going to roll the position out to July. The majority of time, it's a block. Not always, but a lot of the time it's a block. Again, because there's really no urgency there. So it got to the point, and probably the most important thing was the failure rate of size blocks as far as tailing trades. It got to the point where I don't even look at them anymore. Like, I see them, right? Because I'm looking at everything, but I'm never making a play off a block. And if you put a gun to my head and said, all right, listen, yeah, if you had to pick a type of block that maybe you would consider playing off of, it would probably have to be in an unusual name, smaller, unusual name, and it would be a smaller block. And maybe I'd consider it if you had a gun to my head. Right? So you catch my drift. I only want to focus my time on sweeper activity. And I suggest every single one of you, especially if you're newer or you've been looking at flow and haven't found success, you just want to focus on sweeper activity. And anytime you see a block, and this is what I do, act like it doesn't even exist. And you guys know there are blocks going off, 3 million, 10 million, 5, and you see those crazy numbers too, right? You see the $20 million blocks and $30 million blocks, right? It's because they're not a clean, legitimate directional bet. They're likely dumping a bunch of equity and replacing the stock with those calls. That's why the player's willing to show that much size in a block. That's the other thing too, right? If I wanted to build a position in a name, do I really want to go out there and flash some $30 million or $10 million block of calls to the whole world? If I'm looking to build a position in a name at these levels or better levels, do I want the whole world to know what the hell I'm doing? It's even now hard enough with the sweeps. They got to sneak in. So it's, as much as people would disagree with me and don't want to hear it, the probability of a block being a clean bet, forget about aggressive because it's not, but just being a clean bet, you're picking from the wrong pile. And things are hard enough as it is. You rather narrow it down to the best pile of action to pick from. All right, so that's my feeling on blocks. I don't even need to get even deeper into the block conversation. Splits, all that, there are different types of blocks. If it was up to me, the steam room would just be solely sweeps and that's it. We took it into consideration at one point, but here's what happens. You get people all day long. Well, how come the alert board is not targeting that $5 million bet that they're talking about on Twitter? How come Jesus didn't see that $5 million bet? You get it all day long. So I'll have to answer, or whoever, Norse or Matt or whoever's doing it that particular day, would have to answer probably a gazillion questions on why some of the order flow out there is not being flagged in the room. So that's the reason. But, if I had my choice and I need to worry about dealing with any of that, I wouldn't even have blocks being posted on the board. Because I'm letting you guys, when they're rolling anyhow, I'm letting you guys know. Some players want to know about it, right? They want to know if there's a size block in the name, just to know, even for rolling purposes, but whatever, it is what it is, okay? So that's the difference between sweeps and blocks, and why there's no comparison, okay? There's no comparison. Now, there are other type of orders in the makeup of flow that aren't as useless as blocks, okay? One of them I'm going to tell you about is really a bullish bet, okay? And another is not as bullish. You guys are probably familiar with it, spreads, but it's a legitimate bet. More conservative, right? It's more conservative than an aggressive sweep. Okay? Because again, go back to my example. If you really felt that XYZ was about to take off here, are you going to open up call spreads? You know, you might be bullish on XYZ, but you have some doubts. You don't want to dish out the premium, right? You have some doubts. But if you didn't, you wouldn't be selling upside calls to cut your cost if you had that conviction, right? You'd be sweeping the book across the board. So there's still a difference, but it's bull flow, as we like to say, right? It's bull flow, okay? Especially when they come in size, because sometimes you see some big time call spreads. It's bullish positioning, okay? Even though it's not aggressive. So the other thing, aside from spreads, are risk reversals, right? And what a risk reversal is, it's a lot more rare than a sweep, a lot more rare, is when a player sells puts, okay? By selling the puts, they take in premium and they use that premium to finance buying calls, okay? So they're selling puts, which basically in simple English is a bullish wager they get paid for, and if the stock goes lower, they get put to stock. So they either want to own the stock or are going to own the stock if it goes lower. So obviously they have confidence in the name. Okay. And they're taking that premium instead of putting it in their pocket, right? Because they're not sure of the upside potential. They feel like the downside's limited. They'll sell puts. But if they were unsure about the upside, they just keep the premium on the put sale. But instead, they're taking that premium and risking it on calls. Okay, so that's a bull risk reversal. And an extremely bullish wager. Okay, the main issue with bullish risk reversals that I've run into, one, they're really rare, but even more so when they're clean, they're really rare. And what I mean by that, a risk reversal is a very common stock replacement strategy. So if I own 100,000 shares of Microsoft, right? I'm a fund, I own 100,000 shares of Microsoft. I don't want that much principal risk out there. I'll dump those 100,000 shares of Microsoft and I'll open up a bull risk reversal on it. You understand? So the problem there is, even though it's extremely bullish combination bet, if it's tied to stock, it's really not that bullish. So when they're not tied to stock, that's when it's something special, right? And you can't, it's to have 100% conviction that it's not tied to stock, you will never have, because you don't know, that guy may sell stock a couple days from now, but if you don't see the stock come in with that order, again, we're talking probability and odds. The odds that it's clean, you got better odds that it's clean than it's not. Put it that way. All right? You got better odds that it's clean than it's not. Now, by the way, you picking up on a pattern here? I'm telling you about blocks tied to stock, risk reversal. There's a chance it's tied to stock. Sweeps are rarely tied to stock. Rarely, if ever, tied to stock. So that's the other beauty of sweeps. You know what I mean? All right. So to sum up what I just basically the intro into the positioning, right? So you guys get a clearer understanding. You want to focus your attention on sweeper activity, okay? And the rare occasion there's a bull risk reversal opened, if you remember at the steam room at the time, that I'm telling you, I feel pretty comfortable that it's clean. All right? So all of a sudden, the pile that you're looking at from flow, and there's no exceptions. There's no exceptions. There's no exceptions. All right? And what you're going to find yourself doing or thinking about doing, because you're going to see other people around you in the steam room or other chats or whatever, in bull markets, people get really sloppy. We see it all the time. Currently, they're willing to play anything that looks sizable, traded on the offer. Blocks, schmucks, dots, it doesn't matter. And they're going to get away with it from time to time in a bull market, right? Especially in the market periods of time like we've been in where everything goes up. So you make a bet off a block, and guess what? It went up. Oh shit, Jesus is a moron. What's he talking about? I just cashed a ticket off that block. So I'm warning you, there are going to be times that maybe there's not any sweeper activity you like, or maybe there's a block in a name you have a bias in, and you're going to find yourself questioning if you should pretend what I just told you didn't happen. Okay, so all this sounds simple right now. Oh, Jesus said just focus on sweepers. That's easy enough. But I'm telling you, you're going to run into that predicament where you're dying for action in the name, and it just happens to, there's a block, decent size. I know what Jesus said about the blocks, but I'm going to play it anyway. It's a big one. It's a big one. You know what I mean? Come on. You guys know what I'm talking about. You know exactly what I'm talking about. All right. So basically, you're focusing on sweeper activity and the rare occasion that I tell you that a bull risk reversal is clean. And, a lot of times, like those bull risk reversals, when they're clean, you see them in repetition. It's not just one. Like a player uses that to size into a position. So it's rare, but it exists, especially into weakness a lot of times because they like to sell puts. All right, so let's talk about the sweeps now, because I know a big thing for you guys is what's actionable. That's what everybody wants to know, right? What's actionable? I don't know what actionable, this order actionable. Should I play this order? Should I play that order? I don't know what's actionable. I know that's a big thing, especially amongst newer folk. Okay. The easy answer, all right, you don't want to hear this if you're taking this course, but I'm going to give you the easy answer. Okay. And then I'll get into the more complex. But I'm going to give you the easy way out for those who may want to take the easy way out. Okay. The actionable activity on the day, okay, especially for like swing trades. Okay. We'll talk about date trading as it goes on, but most of you are probably talking about swing trades. Is the flow that I'm isolating and putting on a top bet list and talking about throughout the day. It may not be in the names you like. I'm sorry. But if you want the easy way out of this and you want to know what the top action is that's quote unquote actionable, the top action from that day is the stuff I'm isolating and putting on a list to show you guys a couple times throughout the day and talking about, posting commentary about throughout the day. That's the actionable stuff. The non-actionable stuff, guys, I'm not talking about. I'm not talking about ever. So that's the easy way. And if you're a member of the Steam Room, and even with the commentary in the top bet list, you're unsure if it's actionable, you ask. But if it's not being mentioned, it's not actionable. Okay, that's the easy answer. If you want to be able to figure that stuff out for yourself, that's fine. I give you credit for that. Okay. So this is why we're going to, that's not the only reason, but this is why we're going to do a little digging into what some of the different type of sweeps mean, so you understand what may be actionable for you. All right. So let's start with, all right, let's start with this. All right. You got, here it is. All right. So one thing you need to understand, and I'll show you it on the order too, right? Yeah, I'll save that for last. That'll be easier. Okay, here's where we're going to go. You hear me talk about this constantly, right? Spec sweep. And what's a spec sweep? All right. A spec sweep is a cheap, short-term bet, right? Likely in weeklies, front month, on a name looking to either play off, looking to catch some news or playing off the momentum. Okay, so it's not a bet. A spec sweep is not a bet over the intermediate term on a name, right? When we see Facebook and Apple catch spec sweeps, it's not because they are bullish on the company Facebook and Apple, right? They either feel the sector's in play over the short term, right? There's momentum in the name short term. They may be trying to sniff an upgrade or news in the name short term. There may be an event. Intel, you see all the Intel flow that we've been seeing for next week? All right, there's an event Monday. I think it's Monday. All right, but that's what it is. There's an event. Okay, so you have spec sweeps that really, they're not dishing out big premium. You see a lot of volume there. All right, off a catalyst, a known catalyst in an event. You see that often around events, earnings, investor days, stuff like that. Okay, so these guys are really common, right? We see them all the time. And the other thing with these guys, you see them all over. You see them at near the beginning of trends, midway during trends. You'll see them at the tippy top, right before stocks roll over. All right. There's not conviction behind the name. Okay. And you got to understand you look at your account, your money, and say, oh man, I don't want to piss away money on anything. That's now how the professionals look when they're managing other people's money. They don't look at it like that. They look at a couple $1 million to throw on an Intel for upside exposure into Monday's event as peanuts. a flyer. You understand? That's a flyer for them. Okay, because remember what we spoke about, like the Sharpie activity, the quality activity, usually coming from an institution, they probably have a equity position already in the name. These guys, they don't have equity positions in the name. They're just looking to take a shot. Cheap. I got upside exposure into that Intel event. Maybe I get lucky. If I don't, it was worth the shot. Right? So that's spec sweeps. You hear me talk about them all the time. We've been seeing a ton of them, especially in this bull market of late, right? This is another form of them, right? Very similar to these guys. They're pretty much the same, okay? But these guys are focused on just outright momentum. They're not looking for any news or event or anything like that. You see them come off the opening bell a lot of times. If FANG is in play, they're hitting Facebook, Apple, Microsoft, boom, 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 boom. All in weeklies. Square, boom, Roku, whatever they can press buttons on. And they're always in weeklies. You're lucky if you see them go out front month. Always short term. Okay, why? Because they're playing the momentum on the call side, or you'll see them in bear markets and down markets on the put side. We see them all the time. Okay, they're playing off the momentum. Also, these guys can be hedges. Okay, so if somebody is short Facebook and all of a sudden FANG comes out off the opening bell with a gusto, somebody short Facebook, you know, I'm gonna piss away some money on some Facebook protection and weeklies here, just for this week, so they don't hit me over that. You know, just protect it for this week, or protecting against the Fed. There's some momentum against them. All right, but the majority of the time, they're cheap. Sometimes they'll be decent looking size. They could be decent looking size, but all the time they're short dated. All the time. All the time. And there's usually momentum in the name already. Sometimes, rare occasion, you see them against the current trend or momentum, and that's a nice trade intraday. You know, but the majority of the time is where the momentum is. So these guys are a good indication of where the hot money is. You know, if they're hitting energy names and they're just solely focused on energy names, you know, tech, it's not the right spot. Right? So if you're day trading, you don't want to be in tech where chances are it's chop going on, where all the momentum sweepers are focused in energy, or vice versa. So these guys are just playing the Momo, okay? Or betting on momentum is the better way to say that. All right, so these guys are short-dated sweeps, looking for short-term news, playing off short-term momentum, right? Then we get into some of the other stuff, right? An opening order, all an opening order means is that you don't have to check open interest the following day to see if that order was legit. Okay? It's the volume greater than open interest. That's all it is. And it will be labeled opening. So if you wanted to be 100% sure that it was a clean buyer or seller, actually, just a clean order. Again, you don't have to check open interest. Okay. You will see this and hear me post or mention opening. This DocuSign was an opening bet, meaning the player opened a new position in the name. Right? So JD, we've been seeing action in JD, right? There's 14,000 of these September 75s. Okay? We know by looking at the flow, there's been somebody building a position in these calls, okay? But there is a small chance that this player might have closed, even though it went on the offer. The offer, the bid in the offer is not always the decision maker in bought or sold. And as a matter of fact, you'll see on Trade Alert something say offer, on Thinkorswim something say bid for the same order. And on Fidelity it says mid. You know, it's where the offer was at that time. But that's not always, you know, meaning it was bought to open. Could be bought to close besides. All right. So that's what opening means. All right. So again, going back to the point where we never know for sure what any of this order flow, what the intent is behind all this order flow, right? So when you see what I do here, I opened up 6 different charts. Jesus Christ. Hold on 1 second. Let me shut this off. Okay. When you can eliminate any sort of doubt possible, you know, it's a good thing. So that's the beauty of seeing opening activity. Okay. Otherwise, again, you got to wait till open interest the next day to confirm it. It's not the end of the world, but takes out the doubt right there and then. Okay. So this here, what I was mentioning here, is a clean, good-looking sweep that opens. Okay. So plain and simple, I'm trying to explain it as easy as possible too here, right? This would be it. Oop. Doku. Okay, even the how. All right, clean sweep. We know it's a buyer. We know it opens. Okay, that's a clean order. When you see me post clean or hear clean, that's what I mean by clean. Easy, it's easy to read. You know, I feel good about, I have confidence that I know what the order is, and you should too. All right, so that's next on the list here. As for now, there could be clean order flow in this makeup here. Okay, there could be clean order flow. There could be opening activity in whatchamacallit, Momo sweeps and spec sweepers. You know, it's just going to be in weeklies and front month. Okay, what I mean here by clean, good-looking sweep, it usually is something, and that's what I mentioned here. We have no confidence that of the direction and the bias of the player, okay? And, oh, I'm losing my track here. It's got a little bit of time to it, right? So they're not just solely playing off the momentum today or tomorrow. It looks like an actual bet on the name. Right? So like this Doku, okay? This looks, right? This looks like a bet on Doku. Doesn't look like anything else but a bullish bet on Doku. What else could it look like? A short hedge? No. You know, what does it look like? Momentum, playing off the momentum, looking to catch an upgrade this week and not spending any money, you know, cheap? No. No, that's a clean bet. That's a clean bet. All right. And like, if you were to focus for swing trading, and that's why I put a lot of these clean bets, unfortunately, they're not, you know, there are times we don't have, especially in the names you guys like to play. But the reason why I like to put the clean bets on here, because if you're looking at a chart, okay, it doesn't mean I'm playing them because I like names at certain spots, right? And like, for example, let's say this one. This is a clean bet, Hal. It's also a repeat bet, right? We've seen Hal action out the rear end. All right, but maybe you see something in Hal that you think the stock is going higher, or maybe it pulled back over the past 2 days and you're looking for a dip buy, whatever it may be. This is a clean bet. Okay, this is a clean bet. All right, so this is the stuff you want to focus on for swings, I got lost again. Where the hell? Oh, what happened to my, oh, I'm going to kill somebody. I'm dizzy. You got to, after a market day, yeah, you run up on 8 o'clock. There's not too many marbles left upstairs for me. Hold on here now. All right. Opening bull missiles, right? That slang, basically, that I use. And where it came from is just excitement. Because what it is it's clean, good-looking sweeps that I know where I have confidence in the direction and the bias behind the order, the player placing that order. Okay? But their size, you know, they come in big size. So a lot of times, like I'll see it and you guys hear me on audio, I'll be like, oh shit, what a missile. So that's where bull missile comes from. You know, it's a big, clean order that there's no doubt, you know, somebody's leaning into them. Leaning into that name. So obviously they're not betting on any short-term news or momentum, right? It's not cheap. They're laying some big cash behind it. Especially sometimes you see multiple, like we saw, you know, we called, if you guys were around Micron, the Tepper sweeps, we labeled them, those were bull missiles. Boom, bing, boom, bing, right? Like even honestly, JD recently, like some of those sweeps are missiles. You know, we spoke about that. If it wasn't a Chinese name, I'd definitely take a shot. Like those are missiles. That's big action. And whether you like the name or not, it's irrelevant because, you know, whoever's throwing that action in obviously likes the name. There's no doubt about it. Okay, so that's what bull missiles, when you hear me calling out, oh, opening bull missiles, that's what that is. Clean action, but big time size behind it. All right, we spoke about the bull risk reversal. Rare, but when they show up, really bullish bet, often used by institutions, hedge funds. You're not getting a piker opening up a bull risk reversal. You know, usually it's hedge funds building a position in name, institutions, you know, usually client money that's doing it. All right, and the last one on here is something I really like as well. I mean, this stuff, This is the stuff where I want to pick my swing trades out of, not this stuff. Okay. I want to swing trade, me personally, I want to swing trade calls from this stuff. So it starts from this, but it ends up becoming, one of these three. The last one on here is accumulation. And you guys hear me talk about that in the room constantly. You want to see, one order can mean anything. When we don't know the intent of these players behind these orders, one order can mean anything, okay? But when you see that player or fund keep coming back and for more and more and adding, right, when it looks its worst, that only means one thing, and that means somebody who knows a lot more than you and I is building a position in the name. Can they be wrong? Of course they could be wrong. Everybody could be wrong. Okay. But for me, I want my money there every time. I don't care if I'm wrong. If my money's there. I don't care if I'm wrong. Right? So like everybody looks at these 13Fs and wondering what Tepper and Elliott and Ackman and all these guys do on delayed form heads. This stuff here is in real time. You're seeing what those guys are doing in real time. That's what they do in the options market. This and this. That's what they do. Okay, because like I mentioned yesterday, they more than likely have an equity position already and pretty substantial one, right? Elliott Management, stuff like that. Mike, that guy, Mike Berry, whatever the hell his name is, all he does now, he's doing more and more options. But these guys have positions and they're coming into the leverage market, options market to utilize leverage. That's what they're doing. Okay. And another thing that's very common too, right? This stuff out of the money, right? They're cheap, out of the money calls. Sometimes they're not even realistic and it gets people excited. Everyone's like, oh my God, maybe a buyout, maybe, you know what I mean? It's out of the money, speculative type action. While this is close to the money, high delta. They don't want the stock going up and they're not getting paid because they were cheap and didn't want to dish out premium. That's the opposite of what they want to do, right? This action here, you want to take a small amount of money, right? Lottos. That's basically how they're treating it. This is not lotto action. This is they're building positions in the name. That's the difference, right? So the way I look at it, right, is what the flow, I don't know, maybe it means something to you, or maybe you got a different interpretation, but my interpretation, my only logical interpretation is this is the stuff I want to trade tactically, right? So intraday, scalping, maybe holding for an extra day or two in weeklies like some of you degenerates like to play, right? This is the stuff. And this is the stuff down here that I want to be patient, possibly add to if I'm a little bit early, and not be too concerned about the short-term volatility or normal trading in the name. Right? Because I have high confidence in this because the player is making a substantial wager on the name. This, they're rolling the dice. It's taking a shot. All right? So that's, when I talk about like the interpretation of flow, that's what I mean. All right? A lot of people run into trouble. What do? They short-term trade off this stuff, which is fine, but you can't get angry when something you bought goes down in a week or is flat in a week when that player's hammering out calls 5 months out. You can't. You know, you made up your own interpretation, right? And this, you know, if you're playing off Momo sweepers and the momentum dries up or turns, you got to be ready to act. This is not, like we were saying earlier, they're not making a substantial bet on the name. They're rolling the dice, playing off the juice. You know, so that's why, you know, everybody's different. But for me, equity, playing the stock, I've always felt most comfortable with this because I could be quicker. Momentum runs out, I pull the plug. Stock doesn't act the way I like it, I get stopped out, gone, no harm done. Right? They end up resulting in scratch trades. But there are times where these things go bananas. So they're worth playing, right? If you're looking for that type of action. But you got to be realistic and realize what you're dealing with here. You know, if you're playing with somebody in weeklies and you're looking more than just a day trade, you got to understand that's, you know, it's not likely to turn out in your favor, especially if it wasn't that good of a day trade. The guys we're looking for in the option market, the guys you're looking to swing trade off of in the option market are not showing up in this, guys. Okay? They're not showing up there. They're not playing out of the money weeklies. And if they are, it's a lotto to them. It's like you going to the 7-Eleven and playing the lotto. That's what it is. All right, but like I said, if that's your style, and we're going to get into that right in another portion of this course, of course it's worth paying attention to. As a matter of fact, just to make the point, if you're a day trader, right, you have to pay attention to these guys because these guys might not do you much good sometimes, and they're so rare. You know what I mean? Okay, but a lot of people what they have a problem is this type of action don't show up all the time in names that they like and at the time where they're interested in those names. That's the issue. You know, so do you guys have, I was just going to say, do you guys have an idea of what I'm talking about here? Or, yeah, well, it's not that. Novrain's asking, is with the Momo and spec players, is there a good chance momentum can change? Not all the time. Like momentum can last for a while. We've seen it, you know, you talk about all these energy names or tech names. Like, look, okay, today, ExxonMobil. We've seen some good-looking action in ExxonMobil, okay? But recently, today, right, you see momentum sweeps, right? Today, you saw what they were playing? 19 cents, right? And when they were initially buying this thing, right? When a lot of you guys were buying some of these energy names, and they're like Cunning Folk and all those, they were hammering ExxonMobil. September's with time, January's. Now, because there's momentum in these energy stocks, you see action like today, they're dishing out 19, 20 cents. Right? So they're playing off momentum here. Energy stocks have Momo right now. It's hard to even understand that, but it's the truth, right? Energy stocks are the Momo play right now. Yeah, it's not that even, it's a topping pattern, because I've seen stuff like this, especially in some of these growth names. If you remember back earlier in the year and last year, they were catching momentum sweepers for months, and these stocks were going to new highs every single day, you know? So to answer like Noreen's question, it can last. It can last. But my point is, right, if it turns the other way, or even on an intraday basis, if you're day trading and the momentum runs out, your momentum trade is over. You know? Okay, but the main point I'm making here is, like even ExxonMobil, you cannot treat this action today as we were looking at the action a month ago that was more quality. That's my point. Okay? There's a reason why they're spending 19 cents on these calls, and here they were closer to the money with time. There was a reason. Because here, they know there's more risk here. Right? They're just looking to ride momentum, have some more exposure. So that's what I mean about interpreting right the right flow. Okay? And it's not about win or lose. It's got nothing to do with that. Okay? Like I'll give you an example of one that's what I mentioned, Chinese stock, right? If there was anything else, I'd buy it, like a JD. Okay? This is the complete opposite. No momentum. Okay? Nothing but selling in the name. But there's something out there that likes this thing right here out to September. Right? He's not spending 19 cents. Those are $500,000 million dollar sweeps. Okay? So win or lose, no matter what happens to JD here, that's legitimate buying. Even if it goes down, even if JD goes bankrupt, which could happen to any Chinese company these days, that's legitimate buying. You know? It's legitimate buying. So that's what I try to get on you guys, and it's hard to do in the room. It's a lot easier to do in a course like this to get you guys to understand the difference in the flow. Okay, initial activity. I wanted to touch on that, and I think I want to save that now for the next webinar because I want to spend a lot of time on it. But you guys hear me talk about initial activity, all right? And you see how I focus so much on it. All right, because that's where your best entry is. That's where the best action a lot of times will show up. When the first batch of action comes into the name where we have our doubts, you know, where we have our doubts. Now, everybody loves ExxonMobil, right? And that's why you're seeing a lot of more of that speculative action playing off the momentum. But we're going to talk about the initial activity next week because I want to spend a lot of time on it because that's something I want you guys to really get a grasp on and look for in regards to swing positions. okay? Because not only your win rate will be substantially higher, but you're gonna find you're gonna be a lot earlier in playing these names, not being late to the party. Like somebody mentioned, is it a topping sign where because they're spending 19 cents? Whoever that was makes a good point, because there's always going to be that cheap action that gets caught at the top. Always. They're always around, because what these guys do is they start, right? They hit it big down here. Then they roll, spec action, roll, spec action. And then they know they're going to get caught. They don't care, because that's how they catch the whole trend. You know what I mean? By rolling and playing out of the money calls for added exposure, cheap. So they know they're going to buy, and there's going to be one time where this thing they get burnt on. But that's their strategy. So whoever made that point, I know what he's talking about, because a lot of times you're going to see that action when a stock rolls over. Doesn't mean it's going to roll over, but you're going to see it when it does. You're going to see it when it does. All right, but the main takeaway for you guys, because that's why I wanted to break this up, so you guys can get a grasp on the important stuff, and not too much information all at once here. Okay, and I know, especially initially, it may seem a bit overwhelming, but trust me, once you're aware of this stuff and you're seeing it in real time and you start to do it day to day, it's not that complicated. Trust me, I wouldn't be doing it. I wouldn't be doing it if it was that complicated. Okay, because at the end of this course, you're all going to acknowledge what strategy, what game plan you're going into that next day with, and what you need to look at for that day, that game plan. Exactly. So some of this stuff may not even apply to what you're looking to do and to take out of this market. All right, but I can tell you how I interpret the stuff, right? And this is the stuff I want to be really tactical with. This is the stuff I want to be patient with, swing with time in bigger size. That simple. I'm going to ask, somebody asked the question in chat. It was a good one though, just so they understand. And again, we're going to talk about all this stuff as we get through the course and we can dive into details. But like this Doku, okay, it's a clean bet. The problem that I have with it, right, is where it's coming in, okay? So we saw some Doku leap activity. We saw some Doku sweeper activity at lower levels. So it's a clean bet. Somebody's buying Doku with a decent amount of time, but he could be early. You understand? He could be early very easily and look to add if there's a breather here. But he's more concerned about having a piece just in case there's not. Right? So that, for me, that's a pretty clean interpretation on that Doku. Somebody likes the name, okay, understands it rallied here a bit, and isn't sure if he's going to be able to get a pullback on this thing and needs to own at least a piece. And we'll see. If it does pull a little bit, it wouldn't shock me we see him come back again, right? Just like we see with a lot of these names. All right, but what I'm pointing out to you guys is that it's a clean bet. What the fuck am I clicking on here? It's a clean bet. If you are interested in Doku with time, you may want to play it the same way. You know what I mean? You may want to play it the same way. buy some. If it comes in, you got a ton of time, buy the other half or buy the other quarter and wait, right? But it's clean. That's the most important thing. Make sense? All right. So again, the easy way to, before we wrap up this webinar, so you have an idea going into tomorrow, okay? If you want the actionable stuff, pay attention to this list and pay attention to my commentary, okay? Because a lot of times I'll tell you it's clean action. I'll tell you a lot of times what I may not like about that spot or the action. You know, like this week is a bitch of a week, excuse my French. Why? Because it's June expiration. Think about all the June call buying we saw. All that expires this week. So a lot of people, a lot of funds are just replacing their expiring exposure. Okay? I'll give you an example. ATVI. I have a position in ATVI, June's, that I've been in. It expires Friday. I still like ATVI. I got to do something with it. I roll it out to November. You understand? So again, the easy way is listening to, that's, in my opinion, that's why you're in the steam room and on private Twitter. You're here to pay attention to not the alerts, the commentary, because I'm doing the work for you. The alerts, you could get them free. You don't have to pay a subscription to get the alerts. You know, it's the commentary. But you still want to have an understanding of the type of action as it comes in. And I'm hoping this cleared it up. You know, we talk about this enough, but I still think, you know, some people don't have a full grasp on it. You know, this is the stuff you want to stop yourself out on. And losers shouldn't bother you. They shouldn't bother you. Because this stuff here, okay, you want to win more than you lose on your tactical trades. And you should. You should be able to do that with the proper, if you're utilizing stop losses with the proper money management. You should. They're worth playing, definitely. All right? And this is the stuff you want to focus on for positions in swing trading, right? And by paying attention to the commentary and the top bet list is where you'll see those ideas. Hold on. Oh, Norse flagged out commentary. It's not big premium, but there are so many that add up to big premium. Not in spec action, K-Cramp. So what K-Cramp is asking, like the Intels or the Exxon Mobils, they're 25 cents. But they're tattooing them, right? 50,000 contracts. Sometimes we see crazy numbers in some of these spec names. You still treat it as this, no matter what. Okay? You still treat it as that. You know what I mean, K-Cramp? You don't, because of the amount of it, it doesn't become this. That's what you're asking, right? It doesn't become that. Yeah, exactly. It doesn't become that. Let me see. What are obvious signs that order stock that Trade Alert does a good job of labeling tied trades on blocks. But a lot of times I'll see the block come in via Trade Alert. So you see a huge block of calls and you'll see 50,000 shares of the stock also hit. Okay, but it doesn't even pay to waste your time on the blocks. That's what I'm telling you. Tied, not tied, the majority of them are useless. Useless. Is it fair to say sweep orders are never for hedging purposes? No. These guys, a lot of times they're for hedging purposes. But the point I made earlier, it doesn't matter. If you're day trading or tactically trading off them, if somebody's hedging a short aggressively, he still has the same thesis as buying weekly calls aggressively. He's concerned about a squeeze. There's urgency there, right? So it doesn't matter. Don't even rack your brain. You know, as long as you're seeing enough action. If you see one little sweep in a name that's been destroyed, you don't want to play that. You know what I mean? You want to see the multiple sweeps that are coming in, like we're usually focusing on, and you want to be getting in the middle of that, playing either off the momentum or looking for that short-term catalyst, if that's what you're deciding to do. All right, but it's speculative action. You got to treat it as such. So if someone's making a directional bet 6 months out, why a sweep, assuming they would be the same urgency as 1 to 2 months? Because here's how they approach it. If they're looking, are you talking about they're looking to build a position, I assume, right? If they're looking to build a position, okay, they're not concerned about negotiating. They don't want to negotiate a size block and put it out there. You know what I mean? They rather sweep 500 lots and piece in and stay under the radar a bit more, okay, because they're not concerned about the premium they're dishing out. You know what I mean? There's still that urgency there. That urgency doesn't mean the stock has to move tomorrow. But like, put yourself in their shoes, okay? Somebody tells you Fastly is a name to own. You got to own this name. I don't know how much time you got, but you got to try to own this name and hold it for the next 3 to 6 months. You know, are you going to sit there bidding all day long for Fastly if you really have confidence in whoever that birdie was that whispered in your ear that Fastly was going to go? Are you going to sit there and bid for calls all day long? No, you're going to buy some every time you can. You know, and that's how, you know, when the pros now, more than ever, when the pros buy, they do it via sweep. You know, when the pros are betting either, you know, with conviction on a name or short term, off momentum, whatever, the professionals are sweeping offers. Blocks are dinosaurs. Sweeps, market, or limit orders. What happens is they see what's being offered across all exchanges, okay? And they take out all those offers. That's why you see those weird numbers, 5,030, right? A lot of times you see those weird 1757, 283, because whatever's being offered out across all those exchanges, they take them out. For Momo and spec plays, I use the equity because I can be more nimble. You understand? Like, I don't think you guys realize day trading options is a difficult task. You know, you guys don't realize how difficult that is. It's not easy. It's not easy. As a matter of fact, before, like, I met some of you guys, and here I didn't really know too many people who do it. day trading calls and puts. I'm being honest. It's not easy. All right. What I would suggest, if you are, you got to be a lot more selective and pick your spots, because you need a decent move. Because here's the problem. If you're scalping, how do you limit your downside? Sometimes the spread, you're down, you stopped out already. That's the problem. It's tough. The equity, very easy. I see a name I like, boom, we're throwing in to buy some stock. We pick a spot where we're wrong, and we're either raising stops if it starts to move higher, or take it if we don't like the market that day or not convinced of the momentum. You know what I mean? A lot easier. Like with options, a stock could not move and you're down on the option, right? So I'm taking a scratch on my equity, and you're taking a legitimate day trade loss on your option. Right, you got implied vol. That's another animal. Like, I'm not even going to talk about that on this course, because that's in a league of its own. You know what I mean? Like, what I wanted this course to be is as simple as a way as you can make money or flow in sentiment as possible, without taking all the Greeks and everything else into consideration when you're dealing with options. But the more clever you get playing options, the more you got to pay attention to that stuff. Me, you see what I do. I just buy calls. That's all I do. Right? Or if names that hit this list that I like at spots, I buy calls. That's simple. Yeah, it's tough, Chris. Day trading options is tough. What I would recommend, if it's something you really want to tackle, like you really want to try to do, you have to try to be really, really selective. All right. And I think maybe sentiment, when we dive into that, I would also recommend using that in addition. So at least when you catch the move, it's worth it. You understand, the upside is worth it. Like on a day like today or yesterday, Matt Money, we were talking about that, the last 2 days. It was the scalper's market. You're not looking at day trade options in this market. You get destroyed. You know what I mean? So you really, really got to be selective, and that would be a good thing. That would be a good thing. Yeah, that's what we've been looking for, little guys, and we could just scalp them. So, but if you're not playing the equity and you're looking to day trade calls or puts, whatever it is, you got to wait for a decent setup. That's all. What else we got? Everybody, anybody, did I miss anybody who feels they got, again, we're coming back next week. If I missed a question, I'll leave more room for questioning next week. I promise. Next week, we're going to talk about initial activity, because that's really my bread and butter, and I'll explain to you why and what that is. And I think that for swing trading purposes, especially if you want to be more selective, that is one of the best things to focus on, right? Because that's where the biggest moves start. That's where the sweet spot entries come from. K-Cramp, if you told me I got to just give you one tip in a sentence and that's it, that would be it. That would be it. You get sentiment on your side, pick a name on the top bet list you like. Honestly, it's as simple as that. If you can be that selective and disciplined, You know, that's where your best entries are going to come from. Yeah, exactly. Exactly. So, you know, so that's why, you know, I mentioned that when we get out of here, you're going to have a pretty good idea of what you're going to want to do, right? What setup you're going to be keying on. And you could use that as a measuring stick, you know, even with the action you like. So, like, let's say K Cramp, he's come to the conclusion his blueprint is what he just mentioned: sentiment favorable and focus on top shelf action, right? If he sees a name that doesn't meet those requirements, he could, all right, where's sentiment? How far away is it from a bullish signal? You know what I mean? All right, it's neutral. It's not the end of the world, or it's above neutral. You know, this is not really that strong of a setup. You have a measuring stick. You know what I mean? You have a measuring stick. And that will keep you disciplined. Yeah, that's a good example, trader. Novrin, you were asking about, like, does it mean the momentum is going to stop? You know, the momentum hasn't stopped in these things. Oh, it was somebody else? My bad. It might have been somebody else. But yeah, you guys, a lot of you guys have been all over this energy trade. So you guys know exactly what I'm talking about, you know? There's been a lot of good looking action in these energy names. And there's also been a lot of spec action, right? A lot of spec action around it, momentum action. These things have a lot of Momo right now. Look at them. You know, and what you notice is the momentum action usually comes when these things are moving. And when they go into consolidation, that's where the better looking action comes. You know, then the Momos come and tack on. That's usually how it works. That's usually how it works. Yeah, the financials too. They're finally coming in. Finally coming in. All right, boys and girls, I'm going to wrap it up. All right, again, any questions I missed, say, remember them for next week. All right, I'll get to them all, I promise. Talking on my, yeah, we'll talk on gamma and all that stuff, and the indicators as well, Joe. I'm going to save that stuff for last, though. Okay? We'll talk about all that stuff. Awesome, guys. Have a good night. I'll see you guys tomorrow.